Hello student, we are in the part 1 of journal entries video. In this video, we will see a few sample transactions and the journal entries that have to be written for these sample transactions. First transaction, commenced business with cash rupees 10 lakh. The proprietor has started business with cash of rupees 10 lakh. From the point of view of the business, there is an increase in cash. Cash is an asset, and increase in cash has to be debited. So we will debit the cash account with rupees 10 lakh. The other account involved is capital account. There is an increase in capital. Increase in capital has to be credited. So we will credit capital account with 10 lakh rupees. Narration. For business commenced with cash. Second transaction, commenced business with cash rupees 1 lakh, stock rupees 2 lakh and furniture rupees 3 lakh. So the proprietor has commenced business with these three items. All of cash, stock and furniture are assets. There's an increase in asset and therefore we need to debit these items. Cash account debit with 1 lakh rupees. Stock account debit with 2 lakh rupees. Furniture account debit with 3 lakh rupees. The capital increases. Therefore, we need to credit capital account with the total of the cash, stock and furniture. So, we credit capital with 6 lakh rupees. Narration. For business commenced with cash, stock and furniture. Third transaction, purchased goods for cash rupees 50,000. This is a cash transaction because it's clearly stated in the transaction that the goods were purchased for cash. Moreover, it's purchase of goods, so we can use the term purchases. So the two accounts involved are purchases and cash account. Purchases is an expense. There's an increase in expense, therefore it has to be debited, the purchase account. With 50,000 rupees. We need to credit cash. Cash is an asset, the other account involved. There's a decrease in cash, so we need to credit the asset account, cash account. Narration. For goods purchased with cash. Fourth transaction, purchased furniture for cash. This is also a cash transaction. The two items involved are furniture and cash account. Furniture is an asset. There's an increase in furniture from the point of view of the business, so we need to debit furniture account. The other account involved is cash account. Cash is an asset. There's a decrease in cash of rupees 10,000. So we credit cash account with 10,000 rupees. Narration for furniture purchased for cash. Next transaction, fifth one, purchase stationery for cash rupees 5,000. The two accounts involved are stationery and cash. Remember, this is a cash transaction because it's clearly stated that the stationery has been purchased for cash. The first account involves stationery account is an asset account. There is an increase in stationery, so we need to debit stationery account. We need to debit stationery account with 5,000 rupees. Cash is an asset. Cash is going out, so there's a decrease in cash asset. So we need to credit cash account with 5,000 rupees for stationery purchased. Sixth transaction, purchase of goods from Mohan rupees 15,000. So we've purchased goods from Mohan. The name of the supplier is given Mr. Mohan and it is not specified that it is for cash. So this is a credit transaction. We'll recall that a credit purchase means we purchase goods and promise to pay money at a later date. So cash won't be involved in this transaction. Instead of that, we will involve the name of the supplier, Mr. Mohan. It's purchase of goods, so we can use the term purchases. The two accounts involved are purchases and Mohan account. Mohan account being a creditor. Purchase is an expense. There's an increase in expense, so we need to debit purchases account. We need to debit purchases account with 15,000 rupees to Mohan account. Mohan is a creditor, a liability. There's an increase in liability when you purchase goods from Mohan on credit. So we need to credit Mohan's account with 15,000 rupees for goods purchased on credit. Next transaction, purchased building from Ram rupees 1 lakh. Again, the term for cash is not given. The name of the supplier is given, Mr. Ram. So this is a credit transaction. The two accounts involved are building and Ram, the supplier of the asset. So the first account involved is building account. Building is an asset. There is an increase in the asset. So we'll debit building account with 1 lakh rupees to Ram account. Ram is a liability, the supplier of building on credit. So we will credit Ram account with 1 lakh rupees for building purchased. Eighth transaction, goods purchased returned to Mohan rupees 1,000. This is purchase return, or another term is returns outwards. The two accounts involved will be Mohan, the creditor, and returns outwards. Remember, the liability of Mr. Mohan will reduce when we return goods purchased. So we need to, when there is a decrease in liability, we need to debit the liability. So Mohan account debit 1000 rupees to purchases return account. Purchases is an expense. Purchase return will be decrease in expense. So decrease in expense is credited. So I credit purchase return account for goods purchased returned. Next transaction, goods sold for cash rupees 25,000. The term for cash is used, so it is a cash transaction. Goods are sold, so we can use the term sales. The two accounts involved are cash account and sales account. Cash is an asset. There is an increase in the cash, so we debit cash account. Sales is revenue. There's an increase in revenue, so we credit the sales account. Narration for goods sold. Furniture sold for cash rupees 12,000. This is again a cash transaction. The two accounts involved are cash and furniture. There's an increase of cash asset account, so we need to debit the cash account. And we need to credit furniture account. Furniture is an asset. There's a decrease in furniture because we are selling the furniture. So we credit furniture with 12,000 rupees for furniture sold. It's the narration. Next transaction, number 11. Goods sold to Rahul, rupees 20,000. Now this is a credit transaction, a credit sale, because the term for cash is not used and the name of the debtor is given. We will recall that credit sales means goods have been sold and the purchaser of the goods promised to pay us the money at a later date. So that is credit sales. The two accounts involved are Rahul debtor account and sales account. Rahul debtor account is a asset account. There's an increase in asset, so we debit Rahul account with 20,000 rupees. And the other account, sales account, sales is a revenue. When we sell goods, there's an increase in revenue. So we credit the revenue account with 20,000 rupees. Narration for goods sold on credit to Rahul. Twelfth transaction, Rahul returned goods of 8,000 rupees. So we had initially sold goods to Rahul and now Rahul is returning the goods. The account involved will be sales return or return inwards account, and the other account will be Rahul account. So sales return account. Sales is revenue. When goods sold are returned, there's a decrease in revenue. Decrease in revenue will be debited. So we'll debit sales return with 8,000 rupees. Rahul is a debtor. Debtor is an asset account. There's a decrease in asset because the amount which Rahul owes us will reduce because he's returned the goods. So Rahul account is an asset account and there's a decrease in assets. So I'll credit Rahul account with 8,000 rupees for sold goods returned. 13th transaction, paid rent 6,000 rupees. Now the business is paying an expense. The name of the expense is rent account. There's an increase in expense, so we debit the rent account with 6,000 rupees. The other account involved is cash account. Cash is an asset and there's a decrease in the asset account. So we credit cash account with 6,000 rupees. Narration for rent paid. Fourteenth transaction, paid wages rupees 8,000. Again, it's an expense which is incurred by the business. The name of the expense is wages. There's an increase in wages. So we debit the wages account with 8,000 rupees. The other account involved is cash account. Cash is an asset and there's a decrease in asset. So I credit cash account with 8,000 rupees for wages paid. Fifteenth transaction, received interest 10,000 rupees. So the business has received cash of 10,000 rupees. The two accounts involved are cash account and the nominal account of interest. It's a revenue and there's an increase in revenue. So interest has to be credited. So cash account is an asset account. There's an increase in asset. So we debit cash with 10,000 rupees. To interest account, the other account involved, there's an increase in revenue. So we credit interest account with 10,000 rupees for interest received is the narration. Sixteenth transaction, received commission 12,000. Another instance of commission received or income received. So we debit cash account. The business is receiving cash. There's an increase in the asset of cash. So I debit cash account. The name of the income is commission. There is an increase in revenue account. Increase in revenue is credited. So I credit commission account with 12,000 rupees for commission received. Next transaction, 17th transaction, paid 12,000 to creditor Ramesh on account. Amount owed to him is rupees 12,500. Now when the word on account is used, it means it is not in full settlement. We are paying Ramesh creditor amount of 12,000 and later on we will repay him the other 500. So we need to pay creditor Ramesh cash of 12,000. The two accounts involved are Ramesh account and cash account. Ramesh is a creditor, a liability. When we pay him, the liability reduces and decrease in liability has to be debited. So I will debit Ramesh's account with 12,000 rupees. There is the account involved. The other account involved is cash account. Cash is an asset. There is a decrease in cash. So we credit cash account with 12,000 rupees for amount paid to Ramesh. Now the 18th transaction, paid 12,000 to creditor Ramesh in full settlement of his account of 12,500. It means for the debt of 12,500, the business is paying 12,000 and it will not pay any more. It is to settle the debt of 12,500. So here we have the net difference as rupees 500 discount received. So let's check the accounts involved. First account is Ramesh account. We are paying him 12,500 is reducing from the amount of the liability. So we'll debit Ramesh a decrease in liability is debited. So we'll debit Ramesh account with 12,500. Another account involved is cash account. Cash is decreasing by 12,000 rupees. So we credit cash with 12,000. Decrease in cash or asset account is credited. And we are receiving a discount of 500 rupees. The difference between 12,500 and 12,000 rupees. Discount received is a revenue and increase in revenue is credited. For paying Ramesh in full settlement. That's the narration. Nineteenth transaction. Received 14,000 from debtor Manoj on account. He owed us rupees 15,000. So the word on account is used. It means that now we receive 14,000 rupees and later on the remaining 1,000 we will receive from debtor Manoj. So the two accounts involved are cash account and debtor Manoj account. There's an increase in cash. Cash is an asset. Increase in cash will be debited. So cash account will be debited with 14,000 rupees to debtor Manoj. Manoj is a debtor. Debtor is an asset account. There's a decrease in asset. Once Manoj pays us 14,000, there's a decrease in the amount which Manoj owes us. A decrease in asset, and decrease in asset is credited. So we credit Manoj's account with 14,000 rupees for cash received from Manoj. Twentieth transaction. Received 14,000 from debtor Manoj in full settlement of his account for rupees 15,000. Now the term full settlement is used. It means we are going to receive 14,000 and the debt of Manoj of 15,000 will reduce, which means the difference of 1,000 is discount allowed by us to debtor Manoj. Let's see the accounts involved. Cash account. We are receiving cash as an increase in cash by 14,000. So I will debit cash account with 14,000. The difference between 15,000 and 14,000 is discount allowed. That's an expense. Increase in expense is debited. So I will debit discount allowed with 1,000 rupees to Manoj account. Manoj is a debtor. Debtor is an asset. There's a decrease in asset of 15,000 because we are not going to receive any more amount apart from the 14,000, and the debt of Manoj decreases by 15,000 rupees. Narration. Amount received in full settlement. So in this video, we've seen 20 sample transactions and the journal entries with respect to these transactions. In the upcoming video, we will discuss a few more transactions and journal entries for these transactions.